You make no friends in the pits and you take no prisoners. 1 minute you're up 500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Welcome, everybody, to another live Friday version of the Peter Schiff Show podcast. I have a lot to talk about from today. It was a big week, so make sure and listen to this entire podcast from the beginning to end. You know, I know sometimes people lose interest halfway through. You don't want to do that. There's a lot of really important stuff that I'm going to cover, and you got to pay attention. Now, we got the jobs report for August that came out today. Now, for a while, I wasn't even sure if we were going to get the August report because remember, Trump fired the head of the Bureau of Labor Statistics because last month he didn't like the report because it was really bad. So he said it was rigged just to make him look bad. So he fired her. And there was some talk about the fact that they had to really get everything working better, fix whatever was wrong over there, and that maybe we wouldn't even get a jobs report for August. But we got one, although I'm sure Donald Trump wishes that it wasn't released. And I'm not sure whose head's going to roll now because somebody's got to be on the chopping block because someone's got to get fired here because this jobs report actually paints a bleaker picture than the last one. Right? Not that the revisions are as big as the last one, but that the revisions from last month were made bigger this month. So the job backdrop looks even worse now than it did a month ago. So first, one of the revisions was to the month of June. June, which was revised way down last month to 27,000 jobs. This month, it was revised down to minus 13,000 jobs. So we now found out that in June, we actually lost jobs. Now, it's possible we lost jobs in July and August, too. We just haven't got those revisions yet. But that is a big deal because the last time there was any month where there was a loss of jobs, it was during the COVID lockdowns of 2020. Now, clearly, that was an aberration, right? Companies were forced to shut down. They had no choice. They had to lay off their workers, right? So you really can't even look at 2020. So throw that out as an aberration. So to find another month of a negative number, you got to go back to the 2008 global financial crisis and the Great Recession. So that's the last time, for economic reasons, that we had a jobs number with a negative print. Now, that means during all 4 years of the Biden administration, we didn't have this. We didn't have 1 year where we lost, 1 month rather, where we lost jobs. Now, you know, Trump keeps criticizing the Biden economy for being the worst in history and how his is the greatest, yet we never had a single month under 4 years of Biden than we just had in June under Trump. So I think these criticisms are misplaced. You know, when you live in a glass White House, you're not supposed to throw stones. And it's not just 1 month. The last 3 months, the average, including today's, which I'm about to get to, but the average creation of jobs is just 29,000 per month. Again, the only time we've seen a number that low was during the COVID pandemic and during the 2008-2009 Great Recession financial crisis. So the labor market, any way you want to measure it, is the weakest it's been outside of a major recession or a man-made, a pandemic. So there's no way that, Trump could claim that we have a strong labor market when all of the government evidence shows how bad it was. In fact, the consensus estimate for the month of August was 77,000 jobs. We got 22,000. That's it. 22,000 jobs is all that was created. And maybe more significantly, we lost 12,000 manufacturing jobs. Those are the ones that were supposed to be coming back because of the tariffs. Every day I hear somebody like Howard Lutnick on television talking about all these factories that are being built and all these factory jobs. Well, the numbers don't support that. We're still losing factory jobs. We're not creating them. In fact, if you look beneath the surface at the household survey, we lost a lot of full-time jobs. All of the jobs, not that we created that many, were part-time jobs, but we lost well over 100,000, I forget the number, of full-time jobs and created a bunch of part-time jobs to make up the difference. So an extremely weak report. The unemployment rate rose to 4.3. Now, that really doesn't paint a true picture of the labor market. A more accurate picture is painted by the U6 rate, which jumped up to 8.1%. Now, 8.1% is far closer to the actual unemployment rate. It's still lower, but it's a lot closer than 4.3. So if the Fed really was paying attention to the data, they would look at 8.1. They wouldn't look at 4.3. 4.3 is a joke because 4.3 doesn't count all the people who have part-time jobs but are still looking for full-time jobs. They're unemployed, right? They're underemployed. They should count. They used to count. They counted in the 70s. They counted in the 80s. So why don't they count now? In fact, when we want to compare today's unemployment rate to the 70s or 80s to say it's not that bad, we never, make the correction to adjust it. Because if we did, the public would know just how bad it is. But again, even the U6 rate does not include discouraged workers who have been discouraged for more than a year. They were included in the 70s and the 80s. So it's a complete fraud. We have a weak labor market. But it's not just Donald Trump who's got this wrong. It's Powell. It's the Fed. If you go back to not the very last Jackson Hole speech, but even the last FOMC press conference that Powell held after they didn't cut rates, and go back and look at pretty much every press conference that the Fed has held since Trump's been president. And Powell has said we have a very strong labor market. Like he's impressed. He's surprised by how strong it is, right? He keeps talking about it. Well, we now know that we have the weakest labor market since the Great Recession. So if that is the case, how could the labor market be strong when it's objectively so weak? So what that means is Powell was wrong. He has no idea what he's talking about. I mean, maybe he based his entire opinion on the numbers that came out of the Bureau of Labor Statistics before they made the revisions. Well, if all the Fed does is collect data that the government itself creates, and it bases all of its opinions on this government data, what the hell do we need the Fed for? Why do we need all these high-priced employees? Why do we need to build them a multi-billion-dollar headquarters, right? If they don't do anything, if they simply take the government's numbers at face value, and then they base all their monetary policy and all their forecasts on bad data that they get spoon-fed by the government. But the bottom line is the Fed and Powell were completely wrong in their characterization of the U.S. labor market as being strong when we have one of the weakest labor markets in memory. That's number one. Number two, you have to ask yourself, if the Fed was so wrong on the labor market, what about inflation? Because at the same time, the Fed is assuring us that the labor market is strong, They also assured us that inflation is contained, that it's headed back down to 2%, right? That long-term inflation expectations are well anchored. Well, clearly, if the Fed was wrong on unemployment, and they weren't just wrong, they couldn't be more wrong, right? They were as wrong as you could possibly be on the labor market. So why would they be any more accurate on inflation? They won't be. They are just as wrong on inflation in the opposite direction. Inflation is much stronger than the Fed has claimed, whereas the labor market is much weaker. And the markets are going to figure this out in the weeks and months ahead. And in fact, the odds of a September rate cut shot up. And in fact, I think now the markets are looking for the Fed to cut rates every time they meet between now and the end of the year, and maybe some more rate cuts next year. But the problem is the Fed is cutting into rising inflation and rising inflation pressures. We have never seen this, at least in modern times, right? Normally, when the Fed is cutting, inflation pressures are not there. You know, the Fed was able to hide behind the fact that we were below their 2% target, or pretty much right on it. But this is going to be the first time that we're starting an easing cycle when inflation is above target and rising. It's not just that it's above target, it's the trajectory. And if inflation is going up now, just imagine what's going to happen when the Fed starts cutting. And it's not just the Fed cutting rates, it's the entire Trump fiscal policy. The deficits are exploding. And as I've said, when the Fed does cut rates later in the month, I expect long-term rates to rise, not fall, rise, because of the inflationary pressures that will be exerted by the cut. And there's going to be a call for more QE. In fact, I heard earlier in the week, I forget which of the Trump cronies talked about it. Maybe it was Howard Lutnick and maybe it was Scott Bessent. I forget. But he said that Trump will soon declare a housing emergency. Well, what's the housing emergency? Housing prices are too high. Americans are too broke to buy them. What's the free market solution? Let home prices drop. But that's not Trump's solution. He's got a socialist solution. We're going to talk about that and a lot more stuff on the other side of this commercial break. So stick around. We're coming right back.
I've never been a nicotine user, but when Lucy sent me a sample of their products, I really was impressed. I tried the 4 milligram version, and it was smooth, flavorful, and really enjoyable. But for those who want more of a kick, Lucy also offers 8 milligram and even 12 milligram options. Lucy's products are made with 100% pure nicotine and are always tobacco-free. A modern, clean way to enjoy nicotine. And here's something really innovative. Lucy Breakers. These are nicotine pouches with a twist. Each pouch has a capsule inside that you can break open to release extra flavor and hydration. It's a game changer for everyone who loves a burst of freshness. For added convenience, you can set yourself up with a subscription and have Lucy delivered straight to your door. It's hassle-free and keeps you stocked up with exactly what you need. Try Lucy for yourself at lucy.co. Use promo code GOLD to get 20% off your first order. That's lucy.co, promo code GOLD for 20% off. Lucy offers a smarter, better way to enjoy nicotine. Even as a first-time user, I can tell you it's a standout product. Let's level up your nicotine routine with Lucy. Go to lucy.com/gold and use promo code GOLD to get 20% off your first order. Lucy has a 30-day refund policy if you change your mind. Again, that's lucy.co/gold and use promo code GOLD to get 20% off. And here comes the fine print. Lucy products are only for adults of legal age, and every order is age verified. Warning, this product contains nicotine. Nicotine is an addictive chemical.
Okay, so before the break, I started talking about this so-called housing emergency. And of course, you know, if we had a great economy, why would we have a housing emergency? Part of the emergency has to do with how weak the economy is. Again, you know, if we had the worst economy in the world under Biden, and that economy is objectively worse now, we have a weaker labor market now than we did then. And inflation, even though it's lower than its peak, it is rising. Remember, the worst year for inflation under Biden was his first year. And that was, you know, a leftover from Trump. more specifically, the Fed policy during COVID under Trump, which he endorsed and signed on. But that the worst year for inflation for Biden was his first year. For Trump, the worst year will probably be his last. I think inflation is going to accelerate every year during the Trump presidency. So instead of starting off with high inflation and having it trend lower, he's going to start off with elevated inflation and have it trend higher. Which is why the Republicans are going to lose Congress during the midterms and lose the White House in 2028. And the bigger problem there is a lot of the things that Trump is doing to usurp powers not authorized to the president by the Constitution, to the extent that Congress and the courts allow him to get away with it. His successor, who is going to be a radical left-wing socialist, will wield that weapon with much more danger and veracity than Trump. So this is the problem with creating this slippery slope. All the Republicans who are happy to allow Trump to have all this extra power, right? Even though he's doing harm with it himself. But because it's their guy, they're okay. They're not going to be able to say anything when it's the other team that has that club, and they start using it in an even more destructive way than Trump did. So there is a lot to be concerned about right now, but I'll get to that maybe in another podcast. There's a few things I wanted to discuss during today's podcast. But on this housing emergency, housing prices are too high. Why are housing prices so high? Because for a long time, the Fed kept interest rates at zero. And so a lot of people were able to get really low mortgages, 3% mortgages, 4% mortgages. And because homes are bought not based on what the home cost, but based on the monthly payment, the lower the monthly payment, the more somebody could pay for a house. Now you have a problem where housing prices went way up, but then mortgage rates went way up, and home prices never came back down to levels consistent with more expensive mortgages. Now, of course, that will happen eventually, and that may create a housing emergency in that it's going to create a bunch of defaults. And a lot of people are going to walk away and mail in their keys because they can't sell their houses for more than they owe. Now, some people are staying in their houses only because they've already locked in a low mortgage rate. So that's keeping some of the selling at bay. But at some point, there are people that have to sell their houses for whatever reason. And if they have to slash the prices to do it, they may not have enough money to repay the mortgages. And so this could have a cascading effect. Trump is talking about how much money Fannie and Freddie are making, and he wants to privatize them. Well, they're going to lose a fortune once housing prices drop. And of course, all those losses are on the taxpayer, right? When these things go public. They talked again today about privatizing Fannie and Freddie. But again, they're not being privatized. They're only privatizing the profits. They're socializing the losses to a degree that they've never been socialized before. Because in order to do the offering, they have to take that implicit guarantee and make it explicit. So Donald Trump will be doing something that even Franklin Roosevelt wouldn't do, that even Lyndon Johnson wouldn't do, or Richard Nixon. So Trump is far to the left of those presidents, right? Some of the most liberal, big government presidents we've ever had. And Donald Trump is to the left of them. He wants to do something that even those guys weren't reckless enough and irresponsible enough to do. Now, I guess it's because they didn't have buddies that stood to cash in on it. So, I mean, I think Trump is doing things that help his friends, not that help his country. But again, I digress again. Let me get back to the problem at hand. So home prices would come down, which would create a whole bunch of problems. But, that's what has to happen. Because if housing prices are too high, the solution is for housing prices to go down. Then people can afford to buy them. People can afford to borrow money at higher rates if they don't have to borrow as much money. Because again, it's the monthly payment. So if I'm buying a $500,000 house with a 3% mortgage, if the house goes down to 250,000, maybe the payment is the same with a 6 or 7% mortgage. So I can swing it. Plus also the down payment is less because the purchase price is less. So that is the solution. But Trump doesn't like the free market. So he wants to do something different. And I think what they're going to try to do with the Fed that they are trying to take over and with Fannie and Freddie, my guess is they want to lower the lending standards at Fannie and Freddie so that they can make even riskier loans than they've ever made with the full guarantee of the U.S. government so they can unleash massive credit. And they're probably going to make sure the Federal Reserve steps up a new QE program to buy all these risky mortgages that Fannie and Freddie securitize. Just buy up all their bonds to prop it up and just flood the country with liquidity aimed at propping up the housing market. But of course, all of this is pure inflation. It's a massive credit expansion, and you're just going to accelerate the demise of the dollar and the rise of gold. You know, I did this debate on Zero Hedge the other day. In fact, it was yesterday. And Brett Johnson and I were I guess we're debating, and he believes that the Trump administration's goal is to cement the dollar's role as the reserve currency, to make, the dollar even more important and secure its position. And I said, if that's the government's goal, just about everything the government does, they're going to achieve the opposite. Everything that Trump has done is pushing the world away from the dollar. That's why the dollar is going down. That's why gold is going up. That's why China and India and Russia have never had stronger relationships than the ones they have right now, right? We are, shooting ourselves, again, not in the foot, but in the head. We're also allowing China to make stronger inroads in our own sphere. They're making deals in South America with Canada, right? Because we put big tariffs on imports from Canada and Mexico. And China, China wants free trade. China wants to engage, and we want to, build walls. And so we are lessening the U.S.'s role in the global economy and making the world less likely to want to retain the dollar as the reserve currency, not more. But anyway, on the housing emergency. So all of this is inflationary. All of this is going to drive up gold and push down the dollar as we expand money supply. Of course, the Fed is going to have to do QE because no one else is going to want to buy this stuff. But also the other thing is the tariffs. I still think that the Supreme Court is more likely than not to strike down the tariffs as unconstitutional. And the problem there is the Trump administration has been touting the trillions of dollars that the U.S. government is going to collect from these tariffs. And they've been saying that, look, you don't have to worry about the massive deficits that were created by the big, beautiful bill, because they're going to be at least partially offset by the trillions of dollars of tariff revenue. So you don't really have to worry, right? Well, I never believed that the government was going to collect anywhere near that much money. And to the extent that it collected any money, it was going to collect it from Americans, American businesses, and American consumers. But if the court strikes these tariffs down, and not only does the U.S. government not get future tariff revenue, but it's got to return the revenue it's already collected, I think that is going to be a big negative, because our creditors are now going to be saying, okay, so now what? You ran up the deficits with the big, beautiful bill by cutting taxes and growing government spending, the opposite of what you should have done. And now the one thing that you said was going to offset some of the damage is gone. Now what? We got, and so that's going to put even more downward pressure on dollar and upward pressure on long-term interest rates. Everybody is banking on the Fed's ability to bring down mortgage rates. Well, mortgage rates are a function of the long end. Now, maybe what Trump's plan would be to encourage more Americans to take on adjustable rate mortgages, because if they get like a 1 year or 2 year or 3 year arm, they'll be able to qualify. And maybe with these relaxed Fannie and Freddie standards, they may say, okay, as long as you can swing 1% will approve you, right? So as long as you can handle the really, really low interest rates that you get right now, the government's going to guarantee your mortgage, even though it's obvious that if interest rates ever rise, you have no chance of ever paying your mortgage and it's going to go into default. We don't care, right? Because the Trump administration is not trying to do what's good for the economy in the long run. They're just trying to make it look good in the short run. All they want is to blow more air in the bubble, right? And I guess Trump is hoping that he gets out of Dodge again. And, I think he pressed his luck too much. I think he would have been better off had he just retired after one term that he could have claimed was a success and then sat back and allowed the whole thing to collapse on somebody else's watch. I think that, Biden got lucky, right? Biden was able to sleep through 4 years in the White House without a major crisis. And now Trump comes back in and everything is going to blow up. And of course, it's not just Trump that's going to get the blame. It's going to be the Republican Party and everything that the Republican Party supposedly stands for, even though most of what Trump is doing is not what the Republican Party stood for until Donald Trump became president. And then once he did and became popular, then a lot of people just sold their soul and hopped on the Trump train. And so now it's going to be a Trump train wreck. And, these Republicans are going to have no credibility. Let me get to what happened, though, in the gold market. And, gold hit 3,600 today for the first time ever. Price of gold was up 4% on the week. It's now up 37% on the year. 37% for the price of gold. Now, I've been doing my best to get my audience to buy gold, buy silver. Silver was only up 2.8% on the week. I say only. That's still a big week. Silver closed the week just about 41 or just over $41. Gold didn't hold 3,600. It closed, I think, around 35.90-ish. Traders tend to look at these round numbers and take profits. I wouldn't be surprised if on Monday morning, when the U.S. resumes trading, we gap up in the price of gold well beyond 3,600, which is why you shouldn't wait till Monday to buy your gold. In fact, don't even wait till the end of this podcast. If you are listening to me or watching this on YouTube, pause. Just press pause. Don't worry. I'll still be here. Just pause it. Then go to Schiff Gold and buy some gold right now and buy some silver. Don't wait. Don't wait for me to finish the podcast. This is too important. Put it on pause. Go buy some gold and silver at schiffgold.com. And when you're finished buying it, then come back and watch the rest of the podcast. That's how important it is, right? I want to make sure that people get aboard this train, right? Unlike the Trump train that's going to end in a wreck. This one has got a long way to go. Again, 41% year-to-date gains in gold. Look at the gold mining stocks. The GDX has now officially doubled on the year. So basically, we're through 8 months of the year, right? And we've had a doubling of the GDX. Double. I remember in April, I put out the special report, the best way to buy gold. And I was, practically begging my gold customers not to buy gold because I said, you take that money and buy these gold stocks because I'd never seen them this cheap in my life relative to the price of gold. So I said below ground gold was such a bargain, you have to buy it rather than the above ground variety. But I also saw the greatest combination of fundamentals that I'd ever seen for the price of gold. And I expect an explosion. Last year was the breakout, 2024, when gold broke above 2,000 and moved up above 3,000. But I think this move is going to mirror, at a minimum, the move from 2001 to 2011, where the price of gold was up sixfold. So if you take sixfold from 2,000, that's $12,000 gold, right? We're barely a third of the way to 12,000 or a fourth of the way to $12,000 gold right now. We are so much closer to the bottom than we are the top. Yeah, I really wanted you guys to buy closer to 2,000, but I don't care. You got to buy it now. Same thing with silver. I was telling everybody 30 was the floor. you got to buy $30 silver. There was minimal downside risk. We barely ever went below it after I said that. And now we're buying $40 silver, $41 silver. The problem is, and I've talked to the guys at Schiff Gold, and I've talked to people I know at other gold companies where sales are slow. People just don't want to buy the high. Well, you know what? You got to get used to buying the high. If you don't buy the high, you're not buying gold and silver. You got to buy the high because we're going higher. And the longer you wait to buy the higher the high you're going to buy. So you might as well buy it now, because if you wait, you're just going to pay a higher price. That doesn't mean you're never going to get a down day or a down week, but it's not worth waiting. You got to just read the writing on the wall here and recognize the historic nature of what is going on. In fact, even Bukele of El Salvador, right, the Bitcoin guy, just announced that he bought $50 million worth of gold for El Salvador, right? He was poo-pooing gold a few years ago when he was buying Bitcoin. Now, instead of buying more Bitcoin, he bought $50 million worth of gold. Congratulations. I'm glad to see that. Now, if he could just sell his Bitcoin and buy even more gold, that would even be a better deal. By the way, Bitcoin was barely up today, in the face of a big move up in gold. In fact, year to date, Bitcoin is only up about 18%. I mean, that's not bad, 18%, but gold's up 37%. Bitcoin's supposed to be up a lot more than gold. It's supposed to be a turbocharged version. It's supposed to be gold on steroids, right? But it's only up. And, it could easily finish the year negative. But the more important statistic on Bitcoin, again, Bitcoin is 15% lower today than it was at its peak priced in gold in 2021. That's almost 4 years ago. 4 years of 15% decline. We're almost in a bear market in the gold price of Bitcoin. This, despite all the Bitcoin ETFs buying up all this Bitcoin. They didn't exist 4 years ago, right? The NFT craze hadn't hit yet. All the Super Bowl ads, all the celebrity endorsements. We didn't have all these Bitcoin treasury companies. MicroStrategy hadn't loaded up on all this Bitcoin, tens of billions of dollars worth of Bitcoin. And now all the copycat Bitcoin treasury companies didn't exist. We didn't have the Bitcoin president, right? We didn't have the strategic Bitcoin reserve. We didn't have a Bitcoin czar, right? So none of this existed 4 years ago, right? Yet despite all this, Bitcoin is down 15% against gold. And these hodlers are oblivious to all of this. They just look back to the very beginning of Bitcoin and talk about how much it's up. And they don't look at what's been happening over the last 4 years and question why, right? Gold has this huge move. It's doing exactly what you would expect it to do in the face of a Fed that's about to ease into rising inflation. But why isn't Bitcoin doing that? Why is Bitcoin behaving differently? Why is it following risk assets and not gold if it's digital gold? But people are so wedded to this cult that they don't even bother to question their own beliefs. They just assume as long as they hodl forever, they'll make it to the promised land, right? They've believed the Messiah. They just got to have faith, and they have to ignore all of the other realities that would cast doubt. But I don't know why Bukele decided to buy some gold. Maybe he's starting to lose a little confidence because he obviously could have bought more Bitcoin, but he didn't do that. So good for him, right? For coming over to the right side. But I think the biggest thing, and I'm going to make this point right now, I think the biggest threat now to the dollar, and one of the reasons that I think the price of gold could go ballistic, is because I think there is a good chance that the Supreme Court is going to side with Donald Trump in his ability to fire Lisa Cook, a Fed governor. Now, the only way that the court could really come to that determination, right, it's not going to be to rule that based on having an independent Fed where the governors serve with 12-year terms and they have employment contracts and that presidents can't really fire them unless there is a legitimate cause, right? Not just because they feel that they have a cause, but there is a demonstrable, legitimate cause. And cause generally has to do with something you've done on the job, right? Something dereliction of duty, right? Not something that was dug up in your past because they went on a fishing expedition looking for dirt, right? And they finally dug something up, and they said, "Aha! You lied on a mortgage application," right? The only way I think that the Supreme Court could approve this is if they actually rule on the independence of the Fed. And they rule that a truly independent Fed is unconstitutional, which I believe it is. I never believed that the Federal Reserve Act would hold up to constitutional scrutiny, but it was never really challenged. But I don't think that the creation of what really amounts to, right, a banking cartel that has a monopoly on issuing these Federal Reserve notes, which are then going to be legal tender, I don't think it's authorized. I mean, the Constitution has 3 branches of government, not 4, right? The Federal Reserve is not a branch of the government, right? You have the judicial branch, you have the executive, and you have the legislative. So if the Fed really exists independent of any oversight, it would effectively be like maybe another branch of government. But there's nothing in the Constitution that authorizes this. So I think the Supreme Court might say, the only way the Fed is constitutional is if it's subject to the oversight of some elected official, like the President of the United States. Now, the President of the United States is allowed to nominate the FOMC members. So why can't he fire them? He gets to pick them. Why can't he get rid of them, right? The court might rule that inherent in that power, the power to nominate is the power to terminate, because there's nothing in the Constitution that says that we should have an independent Fed. And I think the justices might say that would be against the Constitution to have such an entity. So I think what the Supreme Court might do is actually strike down the concept that the Federal Reserve is independent and make it clear that all the FOMC members serve at the pleasure of the president. And the president can fire whoever he wants for whatever cause he believes justifies the firing. Because he was elected president, he's got the power, the people trust his judgment, and therefore, if he believes that a FOMC member, for whatever reason, is not fit for the job, then he can remove them. That is the risk, because that will destroy Fed independence. Now, yes, if Trump wants to nominate a replacement FOMC member, the Senate is going to have to approve the nomination. Now, the Senate might, right? The Republicans might, but even if there aren't enough Republicans who want to play ball with what the president is doing, he doesn't need replacement nominees. Even if they're short, they can still convene and rule. So as long as Trump gets rid of enough board members who oppose what he wants to do, so that his guys or gals are in the majority, then even if there aren't enough, so he can fire every single FOMC member until the majority that remains will do what he wants, because the policy is made based on majority vote, right? So if there's only 3 FOMC members left, it's two out of 3 wins, right? So, but this is going to show the world that there is no independent Federal Reserve. And, we've been touting the independence of the Federal Reserve for a long time as this is why you should trust the dollar. This is why you should trust our monetary policy, because the Fed is independent. It's above politics. But if that's not the case, if it's completely political, if the president effectively controls the Fed, meaning that when we elect a new president, we're simultaneously electing a new Fed chairman. In fact, a lot of people have said that the most powerful job in the country is chairman of the Federal Reserve. Well, how can the most powerful position in the government, right, be for an official that's not even authorized by our Constitution? I think it will be very easy for the Supreme Court to declare the whole thing unconstitutional. Now, I don't think they're going to wipe out the Fed completely. I think they're just going to say, in order for the Federal Reserve to be in conformity with the Constitution, it must be accountable to the President of the United States, must be accountable to the Congress. It can't be some independent authority that exists on its own to do whatever it wants, right? I think that is what they're likely to rule. And that's going to send shockwaves throughout the global economy, financial market, because now people are going to realize that, it's going to be debt monetization, right? There is no independent check that's going to force Congress or the president to ever act fiscally responsible. Why should they? Once they control the Fed and they have the printing press, why should they ever cut spending, right? Just print whatever they need. They'll keep interest rates as low as they need. And this is a huge risk that nobody is talking about, the loss of independence. And of course, what I don't expect the Supreme Court to do is recognize why the Fed was independent. Because it's not a government agency. That's the lie. The Federal Reserve is a private banking cartel. The member banks are not owned by the government. They're not part of the government. Even the Federal Open Market Committee, even though they're appointed, the members are appointed by the president and confirmed by the Senate. They are appointed to roles outside the government. And once they are appointed, they are not accountable, right? Once you appoint them to their 12-year term, they do whatever the hell they want, right? You can't say, I don't like your decisions. For cause doesn't mean because you don't like, their monetary policy, right? That if you could just get rid of them because you didn't like their monetary policy, there would be no point of a 12-year term. The whole point of a 12-year term is so you can't get rid of them. Now, obviously, if there's a real legitimate reason that has nothing to do with their policy decisions, then yes. And you can't concoct a reason if it's obvious that the reason is you disagree with their policy decisions, and so you go looking for dirt, then that doesn't count, right? Because it's obvious what you're trying to do. You're trying to remove somebody for their policy choices, which you have no authority to do, and you're trying to use this phony, mortgage thing as a way to do it. But again, the reason that the Fed is independent, and this is not something that this court is going to address, is that what the Federal Reserve does, right, issuing paper money, is something that the U.S. government has no constitutional authority to do. That's why it didn't do it. That's why it created the Fed. It created the Fed to do something that it could not do itself. Why? Because the monetary powers of the Federal Reserve are created in Article 1, Section 8. And in Article 1, Section 8, the federal government is given the power to coin money and regulate its value. Coin money. That's it. What does coining money mean? Well, it means taking money and making a coin out of it, right? Not a paper bill, a coin. And what is money? Well, money is defined in the Constitution as gold and silver. How do you know this? Because Article 1, Section 10 says no state shall make anything but gold and silver coin legal tender. Okay? So that's money. Gold and silver coins, that's legal tender. Nothing else. That's all the Constitution. Now, somebody might say, well, that says no state can make anything other than gold and silver. It doesn't say the federal government. It doesn't have to, because the way the Constitution is written, the federal government can only do what the Constitution authorizes it to do. The states can do whatever they want as long as the Constitution doesn't prohibit it. That's why the Constitution says no state shall coin money or emit bills of credit, right? So states can't make their own money and they can't emit bills of credit. What's a bill of credit? That's paper money, right? So the states are banned from printing paper money. But the federal government is only authorized to coin money. It is not authorized to emit bills of credit. And in fact, the earlier drafts of the Constitution, and you can see this in the Elliott debates, the earliest draft said Congress shall coin money and emit bills of credit. And by a vote of 9-2, they removed emit bills of credit. So it wasn't an oversight. They deliberated allowing the federal government to issue paper money, and then they decided, no way, we don't want to allow it, right? We had a bad experience with the Continental, right? We don't want any paper money. So the Constitution was written to ban paper money, right? So it would never exist, at least not from the government. Now, private banks, they were allowed to emit bills of credit all they wanted, right? Private banks could issue banknotes, and they did issue banknotes. And that's why we ended up getting a central bank, and the Federal Reserve was basically there to rediscount commercial paper issued by other banks. I don't even want to get into all of the rationale behind why people thought having a central bank was a good idea. But the fact of the matter is, it had to be private. It couldn't be part of the government because then it would be unconstitutional. So it had to be this separate thing. Now, in my opinion, the way they went about creating it, I think that's unconstitutional too. And that's what I think the current Supreme Court is going to rule, that this setup, right, of this independent Federal Reserve is unconstitutional and it has to be part of the government. But it's not. And in fact, all these people keep referring to the Federal Reserve as a government agency. It's not a government agency. Look, I talked about the letters I received back in the 1980s from Alan Greenspan. When I wrote him a couple of letters back then, I was just out of college, and I disagreed with his monetary policy. And so I wrote him some letters, and I used his own words against him. I quoted him to him from, his essay Capital that the about gold that was in Ayn Rand's book Capitalism: The Unknown Ideal. And this was right after the 1987 stock market crash. And so I didn't like, the money he was printing to try to, prop everything up. And so he wrote me back a couple of letters, which I still have. But anyway, those letters had stamps on them, right? When you get a letter from a government agency, they don't pay postage, right? It gets franked, right? So any official government letters that you receive, the government doesn't charge itself money, right? Because the government owns the post office. So the government doesn't pay itself. It just sends out the mail. But when the Federal Reserve chairman sends out a letter, he has to buy a stamp. Why? Because he's not part of the government. That's why. If it was part of the government, why is he buying a stamp, right? So it is separate, but it was separate for a reason. Now, people might say, well, there were some legal tender cases, some Supreme Court cases that said paper money was constitutional. Not really, right? Here's what happened. And I don't want to go over all the case sightings. You can look them up. I forget them off the top. Knox versus Lee, Hepburn versus Griswold. I forget them all. My dad went over all these with me years and years ago, and I didn't look them all up, before I did this podcast. But the U.S. government did issue paper money during the war, during the Civil War. And they were the greenbacks. And there was a constitutional challenge to the government issuing greenbacks, right? Because obviously it can't do it. And the Supreme Court ended up upholding the constitutionality of the greenback. But in doing so, it did not look to the monetary part of the Constitution. It didn't say that coin money includes issuing paper money. It knew that wasn't the case, right? So it didn't even bother to look to that section. Instead, it looked at the necessary and proper section and said, look, it was an emergency. We were in the middle of a civil war. And because of this emergency, the government could do in a wartime emergency what the Constitution would not authorize in peacetime. So that first case only agreed that the government could directly print money as a wartime emergency, right? Not like it could just do it under normal, peacetime conditions. So it was an emergency war power only. It was like, hey, if we didn't win the war, the whole country was gone, right? It was so why can't the government do this as an emergency? Kind of like, they can put troops in your house. They need something for a army or stuff like whatever. There's sometimes in emergencies, they commandeer something. They could take your property. They could use it for the war. So if they could do that, they can certainly take your property and give you paper money, right? That was it. Now, the paper money was redeemable in gold and silver. It wasn't like fiat. It was paper money that was eventually redeemable, right? In gold and silver. Now, here's what happened. The notes that they issued had a maturity date. And a lot of these notes matured. And so the government reissued them, right? The war is over. And the government reissued these notes. Now, somebody else challenged it and said, wait a minute, the war is over. The Supreme Court said that you can only issue these notes during a wartime emergency. We're now at peace. What the hell are you doing? You can't do this. Went back up to the Supreme Court again. And the Supreme Court said, well, because the notes were originally issued during war, they could be reissued when they mature. Like the government doesn't, can keep rolling these things over because they already exist. So the ones that already exist that were created during a war, they could stay, right? So now the court ruled that. Now, if you try to say that paper money is unconstitutional, that's the case they point to, right? But all that case said was that paper money, redeemable in gold, issued during a war can be reissued after the war. There has never been a Supreme Court case that has said the federal government can issue irredeemable paper money, right? Paper money backed by nothing during peacetime, right? It's never happened. Now, I don't expect the current court to recognize this and declare any paper money unconstitutional and force us to go back to the gold standard that we had before the Federal Reserve. They're not going to do that. They're not going to disrupt all of that. But I do think they are willing to disrupt to help Trump. I think they will disrupt the concept of Fed independence and say that the Fed needs to be part of the government, which totally destroys the purpose that it wasn't. Because had they tried to make the Federal Reserve part of the government initially, the act never would have passed. And it would have been held unconstitutional, obviously, because the government doesn't have the power to do this. So they had to create this private bank so it could do what it had no authority to do, because private banks are allowed to issue credit. They're allowed to issue bills of credit. In fact, before the Federal Reserve, there were bank notes that circulated from all kinds of banks that people used as currency that were backed by gold. The idea was just to centralize that. So there was one note. So instead of, people walking around in their wallet with notes from different banks, let's say I took the train out to California and I wanted to buy something and I had a note from a bank in New Jersey. What if the guy in California never heard of that bank? How do I know that's legitimate? So the idea was that when I got a note from a bank in New Jersey, I would give it to the Federal Reserve. They would take that note and issue a Federal Reserve note that was backed by that note plus gold, 40% gold. And now I'd have a Federal Reserve note. So when I went out to California with my Federal Reserve note, everybody recognized it, right? That was the whole idea. But all of this was private. Another idea behind the Federal Reserve was to create an elastic money supply. That was like an important thing. And what an elastic money supply meant was that when the economy expanded, the Fed could expand the money supply. But when the economy contracted, the Fed would contract the money supply. Now, that is the opposite of what they do now. See, what the Fed does now is when the economy is expanding, they expand the money supply. But then when the economy contracts and we have recession, they expand it even faster, right? So that harebrained scheme, had they talked about that, when they were passing the Federal Reserve Act, nobody would have voted for it, right? Because that would have just been inflation. And also, again, remember, the original Federal Reserve was not even allowed to buy U.S. Treasuries, right? That's part. If it was a government agency, obviously it could buy U.S. Treasuries. It was banned. It couldn't buy them. It couldn't have them on its balance sheet, right? I don't even think they would have passed the Federal Reserve Act had, in its original form, it been allowed to own treasuries, because people would have seen through that and said, wait a minute, this could be too cozy a relationship. If the Fed can buy treasuries, they could kind of monetize debt. We'll have too much debt. So no, they probably wouldn't have passed it. That is the example of the camel's nose under the tent, right? The slippery slope. You never allow the government an inch, because once they get that inch, they're going to take a mile, right? So we did a lot of damage by opening the window. That's why, this bank should have been shut down. But the problem is where we are now, having Congress or the president controlling the paper money supply is worse than having the Fed do it. And, people think, hey, Peter, why are you defending the Fed? I'm not defending the Fed. I'm the Fed's biggest critic. I just think it'll be even worse when it's being controlled by the president, right? As bad as the Fed has been when it had a modicum of independence, imagine how what's worse is going to be when it has none. But this is the threat that is looming on the horizon. This is one of the reasons that I am just super bullish on gold and silver and incredibly bearish on the U.S. dollar. The dollar index closed, I think, at 97.7. I think this is the weakest close of the year for the dollar index. Look, it's going a lot lower, but nobody is talking about this yet. They will once the Supreme Court rules, right? But nobody is really talking about it now, other than me. I haven't heard anybody else mentioning the possibility of this happening and why it might happen. And yes, I think the Supreme Court is right that the current Fed as constructed was unconstitutional, but what they are going to create is going to be even more unconstitutional than what they strike down. But they're not going to get that, right? They're not going to go far enough. And so the small right is going to lead to a greater wrong. And that's why you got to load up. So as I said, go to Schiff Gold, buy your gold and silver this weekend. My gold fund, gold stocks doubling on the year. Look, it's still early, I think. They're going to double and double and double again. So nobody's talking about it. I watch the financial markets. They mention gold once in a while, but there's no enthusiasm. They still talk more about Bitcoin than gold, even though Bitcoin is not going up and gold is. And these gold stocks are making nothing but money for the people who bought them. But again, it's still early. So my gold fund, Europe Pacific Gold Fund, EPGIX. Hopefully I got the symbol right that time, but that is the no load version. You could buy that at any discount broker. The Europe Pacific Gold Fund. If you don't have a discount brokerage account, you can call up our advisors, or you can just go directly to the website, europac.com, and you can just buy my fund right off my website. Or you can call up the representatives at Europe Pacific Asset Management and set up a separately managed account where we'll manage a portfolio of gold stocks, but also not just gold stocks, international stocks, foreign stocks. Again, had a much better day today, going up, especially with the weak dollar in the face of a weakening U.S. stock market. The world is divesting of U.S. stocks. The central banks are divesting of U.S. dollars. And this is going to accelerate once the Supreme Court destroys even the pretense of an independent Fed. In the meantime, make sure and go to Schiff Sovereign. If you haven't already signed up for our newsletter, go to Schiff Sovereign. Oh, and also, if you're not a subscriber to the Schiff Gold YouTube channel, I will be doing, probably not today, but I will be doing a lot of separate Friday updates specific to the gold market on Fridays, maybe where we don't get a jobs report. But make sure and go over to my YouTube channel for Schiff Gold and subscribe separately, because we only have about 18,000 subscribers there, and we have close to 600,000 here. So a lot of you who aren't subscribed to the Schiff Gold YouTube channel need to go over there and subscribe. Meanwhile, have a great weekend, everybody. And if you're not subscribing to this YouTube channel, make sure and subscribe to that too if you're listening on YouTube. And if you're not, go to YouTube and sign up, because I still haven't cracked through that 600,000 subscriber barrier. Bye for now.